Hi everyone and welcome to Boothy Bites. Boothy, welcome to your own show. How are you?
I'm very good, thank you, Jackie. Very good. Thank you very much for having me.
No worries. You're looking very nice in your salmon shirt today.
Thank you. I told you before it's date night tonight, so Kelly bought me this shirt for Christmas, and therefore I've got to impress tonight. So dressed to impress, and yeah, we're going to Churchill's for a beer. There you go. How classy.
Good man, good man. All right, let's jump in. So last month was all talk about the federal budget. What's changed since then?
Yeah, okay. Well, firstly, apologies. Last month we didn't do a Boothy Bites, right? Because I was in the UK and traveling. But yeah, what a crazy couple of months, really. So obviously, we got wind of the federal budget changes, which wrongly or rightly, I do see the merit in what they're trying to achieve there. And it's probably it's a conversation Kelly will have tonight, but Kelly and I will have tonight, about CGT concessions and things like that. But obviously, the goal of this Labour government is to try and make property more accessible and affordable to early entries into the marketplace, and therefore the restrictions and things for the future for investment properties will make it a little bit more complicated in making that decision. And we've already seen that. We've had a lot of clients call up and say, hey, what does that mean for me? How does this change things? So really fundamentally, look, there's a bit of grandfathering with this legislation. What that means is if you've already got a property, there's no changes, right? So, your negative gearing benefits are there, your CGT elements are there too. But if you're purchasing a new property right now, well then, you do need to get a bit of advice. In simple terms, if you buy a brand new property, something which has never been lived in before, you do get some extra benefits with regards to negative gearing, okay? However, if you buy an existing property, you're not eligible for that. But, again, if you're looking to invest in property, I think get some good advice, have a person who is a professional in that space, seek counsel with your financial planner or your accountant or a property specialist or your mortgage broker. I think we all know the rules that we're playing with here, but having a team around making a decision and helping you take that next step is important. And don't get caught out making silly mistakes on a property which is not right for you. And I think sadly, a lot of this will mean that there's a bit more of a focus on new builds right now, wrongly or rightly. But just remember, if you're buying a new build, often those prices are inflated because of these benefits and things, things like first homeowner benefits and other concessions, and now this negative gearing benefit. So, don't get sucked in with the crowd. Make sure you do your research, have your professionals in that, and away we go. The other thing that changed, which was a left field thing that changed, was the self-managed super fund for residential properties. So again, it's grandfathered. Anyone who owns a property, residential property that is, in self-managed super fund, no changes for us there. But obviously, with the fact that the legislation's changed for new properties bought with a self-managed super fund arrangement, you're no longer going to be able to do it after August. That means the products and availability of products, because the lenders no longer have to provide the products for new stuff, is going to be a little bit more limiting. And there's a lot of businesses out there who built out niche products supporting residential property and self-managed super funds. So it's a bit of chaos right now trying to figure out who's still in, who's out, how we manage property going forward. But the fact is you can't buy a self-managed super fund residential property after August. Now, is that good or bad? Firstly, I would say as an older person, the benefits of buying a property, and I do have a property in super, are great. But when we set the platform in place to buy the property in super, we made sure that one, we spoke to a financial planner, and two, we made sure that as part of this process, we were still looking to diversify the assets that we had in super. So not only were we committing to buy the property, but we were still accumulating traditional wealth through superannuation and fund management like you do normally, okay? Really, for me, this legislation change is tidying up a little bit of that kind of loose market whereby lots of people who are unadvised were using all of their money in super for a single asset. And that was never the intention of the legislation, okay? So really, again, it's trying to cool that property market down, cool that sort of investor push into self-managed super funds with no advice, okay? And I think it's a very, very good thing that they've done this, but obviously it limits sort of the ability to purchase property in a self-managed super fund environment. Interestingly, there are a couple of niche products out there whereby that you can buy in a like a unit trust or a different vehicle as well. So again, reach out to the mortgage brokers around that. And secondly, if you've got lots of cash in your super fund, you can buy property outright, no problems. So again, you do have the ability. But yeah, look, it was a left field change for political gain by the Labour Party. So anyway, look, again, I think it's a really good time to reach out and get advice right now. And I think all we've done through these changes is really support the accountants in the world. They've got to be our best friends, and now they'll be increasing their fees too, right? No doubt about it.
Absolutely. Go the accountants. Are we going to open up a Lydian accountancy now?
Yeah, that's it. Yeah, I've got to find a trucker color cap for that. Yeah, that's it. That's next.
Stay tuned. And so what are you seeing from the banks and lenders at the moment?
Yeah, so we've had the RBA come out and, again, they've been in a difficult situation right now whereby that we've got, this inflation figure, which is above the 2 to 3% band. It is coming down. It's heavily influenced by the cost of fuel right now, which is like a yo-yo. I'm driving along the other day and I'm paying $143 a litre. Then last night I'm driving home and it's like $197 a litre. So it's a roller coaster, just like, the politics of the world today. So, that is really hard for the RBA to make meaningful decisions around decreasing that inflation figure to get back in this band. The other thing is growth in the economy is certainly slowing. There are concerns around unemployment and changes in employment with regards to AI. So what that is meaning is that we're really on hold for now. I don't believe the cash rate will be going up anytime soon. I think we've tightened as much as we need to just to cover this next 6-month period. And really we're looking for some indication about, what next steps for the cash rate and the markets in general for interest rates. And that's a really hard one in this crazy environment today. So, that's meant that the banks now have really squeezed their products into quite a tight space. So all of the prime lenders, there's very little difference in margin between them. So, we're looking at interest rates around sort of 5.9% to 6%, and that's the best rates in the market. But there's a swag of really good lenders in there, and there's a lot of competition in there, yeah? Now, what happened when we kind of got this kind of condensed market last time was that we started to get the banks using different ways to entice change of lenders. And those things that they used were things like introductory rates, so cheaper rates for 6 months, 12 months to get in. Certainly discounted fees, so potentially cashbacks coming into the market to attract people to change, so it covers the cost to move and things like that. But yeah, look, it's we certainly have seen volumes decrease probably by about sort of 15-20% in the last month, and really all that is around this increased interest rate environment. The confusion now we've got with this property market, with this investor space being really clamped down on. And then lastly, we'll talk about property in a sec, but that's had a big impact on that momentum in that space there, and a lot of changes there as well. But some highlighted great rates. We still love the Macquarie Bank because of their service proposition, their banking platform. ING have got a great rate at 5.99. People's Choice are coming in there with a really attractive offer for clients too. So we've got some really, really good discounted rates. Fixed rates, if you're looking to fix in right now, you're probably paying sort of a 35-point premium for a couple of years, which is not crazy. It might mitigate a bit of risk. And the best, I suppose, our best interest-only rate right now with the variable is Auswide at 6.24, which is a really cheap interest-only rate as well. But again, I think it's a great time to come and refresh with your broker. Things like, extending interest-only terms, I think this is a really good time to do that. Make sure your cash flow budget's in place. Look at, have you got the best features in place for your product, like offset, redraw, and those things. Yeah, and reach out to your broker if you're looking to do anything. I think that's a good time.
Yeah, absolutely. Couldn't agree more. And so what are you seeing in the property market right now?
So we've got in the last month, that the Perth market, which was super hot, that's cooled off a little bit. The Brisbane market, which was super hot, it's cooled off a little bit. We've got negative sentiment in the Sydney and the Melbourne market. But I think we've got, again, I think we said this a couple of months ago, there are definitely two pockets of markets. We've got this sort of, $1 to $1.5 million purchase price, which is still in demand because we've got our new purchases really keeping that market afloat, and it's an attractive space and an affordable space for debt. The higher end markets, we're talking sort of 2 million plus. One, we've got a bit of an affordability gap for many people because interest rates now are being assessed at 9%. So that means it's a lot harder to afford that money you need to get to that next big property. The second thing is the people who have got those properties are more reluctant to sell them right now because there has definitely been, probably maybe a 10% to a 15% decline in the value of that property potentially from what was quoted before. So you unless you definitely have to sell, people are pulling their properties from market because there's not that interest, and they've been pushed into a sale price which is a lot less than they were proposed 3 months ago. So again, it's quite a difficult market, but remembering it's seasonal, so we get booms and busts within a year. So we're in winter. People don't want to go out. They want to stay at home in their Jimmy Jams, stay by the fire, watch World Cup and not go out and find property, right? That's it. So of course there's less people attending auctions, less people attending open homes, less people willing to prep a house to sell at this time. I think really what we're looking for is what the spring momentum looks like. But certainly if you cashed up, you've got some money, you've done your due diligence with your banks, there's some great products out there to borrow a little bit more if you need. This is a good time to buy, I believe. There's still demand for housing in the long term. The prospects of property, for aspirational investors, whether it's your own home or an investment, the long-term benefits of that, have been proven over many, many years. And so again, Lydian has introduced a property advisory team. It's not that we have the people within Lydian directly as property advisors. What we do is we've got trusted people in our business, So we've got people up in southeast Queensland who we know we've worked with before and are really good property advisors. Similarly here in Sydney, Melbourne, over in Perth, wherever you want to purchase a property nationwide or whether you want to review your property nationwide, we've got trusted people that we've worked with for many, many years who will give you an honest appraisal about whether you should buy again, whether you should keep your property and hold it, or whether you should really look to sell that property right now and benefit from the changes there. So again, reach out to us. We'll connect you with the right professional in your area to support your needs. And the Lydian Property Advisory, we are going to build that brand and that presence up into market because it helps our clients, it helps our partners. It's a really good professional service to attach to our brokering team as well. And without property, there's no debt. So there you go. Lydian Property. And we've got a yellow trucker cap. I don't have it, but anyway, we'll get it.
Amazing. Well, can we imagine you're putting on that Lydian Property Advisory cap just for a second? Okay, that will do. And can you tell me, if you were looking to buy or sell over the next few months, what would be your advice?
Firstly, I would revisit my lending approval just to make sure that all of the elements of the credit I put forward 3 or 4 months ago are still in place today, and that the bank that I'm choosing to go with still has the best rate, the best product, and still will approve me, okay? Because there's quite a few changes in the credit market. So number one, make sure you've got your ducks lined up. The second thing is I would certainly consider getting a property advisor to support me in that purchase process. Okay, and the reason I say that is because the difference between buying a property today at a good price and potentially buying it at a bad price, there's a lot of variation. We've got a lot of volatility right now, and we've got a lot of people who are motivated to sell. We've got a lot more stock on the market. We've got a lot more people considering to sell right now, and the property specialists have all of that knowledge and can actually negotiate for you. And if you're buying a $1.5 million property and you can save 10% on the purchase price, you're $150,000 in the money. And the cost of that service, we've got property advisors who will support you for a sort of a $10,000 fee, maybe even less. We will have a special offer for people looking to purchase in the springtime. But I think having that person in your team is very important, and it can save you a lot of money, but also get you on the ladder quicker. And also make you're going to make that money back very, very quickly as well. So that's my big advice.
Okay, very nice. Thank you.
Are you looking to buy, Jackie?
Hey?
You're looking to buy?
Maybe. You seem to know the Brisbane market pretty well, so who knows?
I know the pubs there pretty good, so I know where I live.
In Paddington, near the Caxton.
Exactly right. Oh, that's pretty dodgy anyway. But yeah, fun.
So one last question. Let's do a quick lap around the room. A Lydian HQ wrap up. What's happening?
Yeah, so I think one of the big things that we've done in the last couple of months, or last month really, was we've launched our new look website, which we're really proud of. And the cool thing about that, it's separating the business a little bit. Not that we're separating it because we're not connected at the hip, but basically we want our clients and our brokers to have a more contemporary website with all of the tools and things which a client would actually get when they're on a website. So, serviceability calculators, stamp duty calculators, interest rate comparisons, all of those things which when people are searching and Googling, they need on a website, and also a quick way to attach and connect to their broker, and also find out a bit more about their brokers, what's their dogs, what's their hobbies, what's their, where they're going on their next holiday, right? Because you want to work with a good person. So we've separated the broker space with some utility connections there. But the other thing is we've lent into the I suppose the B2B side of the website as well, and we've added some extra services. So what are those extra services? So firstly, Lydian, we're out there, we're partnering financial planners. That's our go-to market. So we've got some really good content in that space about the different tiers and partnerships that we offer, from just being really good friends and spot and refer that you're going to get your client looked after, to maybe a bit more of an embed where you're going to you want a little bit more, you want a little bit of a stronger relationship with your broking team. Or lastly, you might well have a lot of volume and you want to build a business within our business, to have a great opportunity to build out a lending service under a joint venture with Lydian. So we've got more information around that. And then the second part of it is, we know that our Lydian team, we've got a lot of professionals in our world which can help our clients. So, we've talked a lot about financial planners. We have a life insurance side to our business, which we're really proud of, Lydian Life, which is powered up by a good friend called Ben Donald. So we're really leaning into that, and that's part of our service proposition, diversification of services. We're really proud around launching the Lydian Property Advisory, which again supports our brokers with lending, insurance, protecting our clients and looking after our clients. And then some of the diversification of the products that we can do. So as a brokerage, we're really proud that not only do our brokers do home loans, and they do them really well, they do investment home loans really well, but all of the complicated loans out there, like corporate loans, self-managed super fund loans for maybe commercial property today, not resi, things like business loans whereby that you've maybe got some ATO debt and you need to clean that up, or you need cash flow finance. We have got really, really good brokers who've got the skill set to be able to manage those conversations with your clients. So again, we want to display those extra services that we've got within the team, and that's what our website's doing. And the last one as well, we get a lot of clients from our planners, where their parents are looking to use the equity in their homes, to help them with life stages, things like medical bills, moving into aged care, downsizing and getting into a smaller property. So again, we've got later life products for those more mature clients as well. So we want to show the full breadth of the services we can provide with our great brokers and support our partners more. And that's it. Drop the mic.
He's ready for date night.
Woo! And Jackie, before you go, tell us about one of your life goals and achievements you've just ticked off recently.
Well, over the weekend, I ran my first half marathon, and I'm so happy. I made it over the finish line. I'm obviously alive. My goal, being my first half marathon, was to just run the entire thing non-stop, so no walking. You should have seen me running through the water stations trying to pick up a cup of water and drinking it. It wasn't pretty, but it meant that I got to the finish line and I achieved my goal. I ran the whole thing. Don't ask me what my pace was because it was very slow, but that doesn't matter.
Exactly right. Exactly. Well, congratulations. I think I remember my first half marathon, and I struggled a little bit too, but it's a big achievement. So well done. And obviously that means the only thing you've got to do next is the marathon. So yeah, watch this space, eh?
Watch this space. Who knows if I'm that crazy? We'll have to wait and see.
All right, I've got to let you go now. Do your day job. All right, Jackie.
Thanks, Boothy.
Yeah. Ciao.
Bye.